Look, thanks very much for the kind introduction. It is really interesting to see more talk of consolidation in the gold sector. I think it's really good for us because it leaves a spot for us to fill as a new 200,000 ounce gold producer. And I think it's a really good spot to target and get to. But today I really want to talk about the Bellevue Gold Project and what we're building. We have an asset in our company that has Tier 1 characteristics, it's still growing, and we're de-risking it as we tick the boxes as we move forward to production in the second half of 2023. Here are the disclaimers available in the ASX, and we have presentations in the booth outside. But to really give an overview of the project, we do have a project that has world-class characteristics, has world-class potential. We've already defined over 3 million ounces of resource and over 1.3 million ounces of reserve at the project. We've defined a 10-year mine life at a 6 gram per tonne head grade, which is fantastic. And for the first 5 years, our life of mine says we're going to be producing 200,000 ounces a year at an all-in sustaining cost of between $1,000 and $1,100 per ounce, which generates considerable margin. We're looking at over $250 million free cash flow per year during that period. And it is an asset that is still growing. So in just the last 10 months, as we've had 2 drill rigs underground, we have grown the mine life by 25% to now have a 10-year life of mine in front of us. And we're still underground drilling as we speak, and we'll be continuing underground and drilling all the way through to production in the second half of next year. And from a de-risking perspective, this is going to be a big part of the Bellevue story over the next sort of 12 months or so as we continue with our underground development and start to tick the boxes to building this mine. We have a fantastic team on board of proven mine builders. We've got Tier 1 contractors on site, like Develop for the mining and GR Engineering for building the plant. And this puts us firmly on production for that timeline of getting gold in the second half of 2023. So from an ESG perspective, ESG has been a huge theme of this conference and is going to be a huge theme of every conference going forward, and every mining company really has to focus on it because the spotlight on ESG is only going to get brighter as we go forward. At Bellevue, we're in an enviable position because we've had a clear ESG strategy that's been in place for over 2 years now. And this is putting us in a position where we can really be a leader from a gold perspective in that ESG space going forward. We have a stated aspiration of becoming a net zero greenhouse gas emissions gold producer. And this isn't in 2050 when everyone's mine life's done. This is in the near future because we really do believe that not all ounces are created equal, and that by producing some zero carbon gold, we can create a product that is sought after by sophisticated, future-facing investors and can potentially trade at a premium. So it's a similar thematic to the blood diamonds back in the 1980s. We're creating a product. So instead of creating a conflict-free product like those guys did, we're going to create a carbon-free product. And what's exciting to us is that Bellevue has designed and costed that pathway to net zero into our current mine plan. And we're on track right now to become the lowest greenhouse gas intensity of any gold producer in Australia, and we're on that pathway. It's designed and costed in. And as a part of that, ESG is not just about carbon. We have been able to attract a really diverse team. We've got sector-leading diversity within our company, over 40% female participation, and that includes at a board level and at a senior management level as well. And de-risking is going to become a bigger and bigger part of the Bellevue Gold story over the next 12 months or so. This is going to be the case and continue to be the case as we continue towards production. We have a quality project that's fully funded to production. We have $351 million of available liquidity, which includes $151 million cash and a $200 million debt facility with Macquarie that is undrawn. We're well advanced along the development timeline. So we started our underground development in July 2020, which means we're on the home stretch now on our way to first gold at the end of next year. I think importantly, as we've ticked the boxes through that development pipeline, we've now locked in a significant portion of our pre-production capital expenditure. So 90% of our pre-production cost is either contracted or it's tendered. And so what this does is it shields us from future cost escalation in a market that's quite volatile and has been quite inflationary over the past 12 months. So it's a pretty good place to be in. If you have a look at the market and the market performance over the last 12 months, what you can see is that we at Bellevue have been in a bit of a holding pattern, or if you like, it's a consolidation phase, which is typical and common for gold developers. And if you look at the other gold developers that are a bit more advanced along the pipeline than us, so the Calidus of the world who are here today, Red 5 who have just built the King of the Hills project, what you've seen is a significant re-rate over the 12-month period leading into them producing first gold. This is the pathway for Bellevue over the next 12 months. As we build the project, history says that rather than continuing to trade at a discount to our net asset value like other development companies, as we de-risk, we will be re-rated onto cash flow multiples. And these cash flows are going to be significant. You know, we have an all-in sustaining cost midpoint of $1,050 an ounce. And what you can see here is a significant margin above the rest of the market, which leaves room for a significant re-rate over this exciting period we have ahead as we build our project. So our board and management team, we've got all the experience that you need to build this mine. We've got a very experienced and engaged board, so led by Steve Parsons, who's the managing director, who's here at the conference if you want to catch up with him. He's very excited about the project. He almost stole the microphone from me today. We've got Kevin Tomlinson, who's our chairman, who is a very experienced corporate guy. But I think, importantly, in recent months, we've revamped the management team at Bellevue. So Bill Sterling, our ops manager, and myself, we both started in January. I was with Northern Star for over 11 years, Bill for over 7 years. And recently we've had Guy Moore join as our CFO. So Guy's also in the audience here and you can talk to him at our booth. And you know, Guy's also come across from Northern Star. And what I can say is that we learnt a hell of a lot at our time at Northern Star, about effective and efficient mining operations, about how to run a mining company as a real business. But I think most importantly, we learnt what's possible from a growth perspective if you hit your targets, you deliver what you say you're going to do, and you build a high-performance team and a high-performance culture along the way. So as a management team, we're locked in, we're engaged, and we're ready to apply what we've learnt at the brilliant asset that we have at Bellevue. So we have a great address too. So we're in the Agnew-Wiluna Greenstone Belt, which is in northern Goldfields region of Western Australia. There are other really big gold projects in the region. So we have Agnew to the south, which is a 200,000 ounce mine. We've got Jundee to the north, 300,000 ounce mine. These mines have been going for 30 years plus, and they have a similar geological setting to us. So, our geology, similar to them, consists of deep tapping crustal scale structures in an intact greenstone sequence, which is bounded by late stage conglomerates. So this is your classic Archean style gold deposit, similar to those mines around. But it is actually quite a geological exciting area. 15 k's to our north, we have Liontown's Kathleen Valley project. Only 2.5 k's from us, you can see the head frame for the Cosmos mine or the Odysseus mine that is just transferring from Western areas to IGO. So that's a pretty exciting address to be in. And the ore body that we've designed is already significant and already pretty big, right? It is over 3 million ounces of resource already at a great grade of 10 grams per tonne. And it's not just one load that we're chasing here, it's multiple lodes that have been well defined and well understood. There's lots of vertically dipping lodes, and then there's a couple of complementary horizontal lodes which make about 10% of the life of mine tonnes. It is a great endowment. It's about 5,000 ounces per vertical metre in the top section, and we'll match that in the bottom section when we get underground and drill it. And there has been a significant amount of drilling done to date. So there's almost 500,000 metres of 500,000 metres of diamond drilling that's been done on the asset. And what you can see here is some fantastic drill hits that are in each of those separate lodes around. And, you know, from the thicknesses that you see on here, I think that's something worth pointing out, because it is not just a narrow vein ore body. There are several hits here that are 6 metres wide, 8 metres wide, 10 metres wide. And this shows that there's going to be some really thick, good sections to mine when we get underground. So when you have a look at this, you can look at some of our organic growth over recent times. So the Bellevue as it is now was only discovered in 2017. So, you know, less than 5 years ago. And the resource has grown at a big rate since then. And, you know, this includes growth even in the past 10 months, you know, of 30% in our reserves. So the ore body is very well understood from a geological perspective. So as we move our drill rigs underground and we create more drilling fronts to go, we'll be able to get in, drill out the extents of the ore body and keep expanding that resource and reserve. And we'll also be in a much better position to drill out the parallel lodes that we've identified and are poorly tested or untested. So this future drilling is going to add to and enhance the already 10-year mine life that we have at Bellevue. Sorry, I'll just jump back a couple of slides because it's out of order somehow. So I want to talk about that 10-year mine life. This is what it currently looks like. So we've got a solid and robust plan that's backed up by a significant reserve that puts us in an enviable position where we've got production of about 200,000 ounce per annum just by filling up our 1 million tonne per annum mill with the 6 gram reserve that we have. So on top of that sort of base case plan, there are multiple avenues for growth on top of it. We can increase the mill to 1.2 million tonne per annum without any further capital expenditure. All we have to do is get underground and prove that we can match that rate from an underground perspective. We have the opportunity to convert more of our resource, so we have 40% of our current resource that's outside of that life of mine plan. And we also have, you know, further exploration potential. So along the bottom of the slide here, you can see some fantastic hits that are outside of our resource. Hits like, you know, 2 metres at 40 and 5 metres at 18.5. So let me jump forward. I think you stole some of my time. So just the layout of the mine is also a big advantage to what we have. So we've completed almost 5 kilometres of underground development to date. We have a northern production centre, a southern production centre. We've got ventilation set up, pumping, power, all ready to go. This allows us to have between 5 and 6 production fronts at any one time. So what that allows us to do is move around from area to area as we go and we mine. And, you know, as a part of this infrastructure, in the northern and southern sections, we have independent firing, so independent ventilation systems, independent firing, which allows for reduced jumbo downtime and extra productivity. And what you can see in the picture on the right here is a fantastic rock mass. So this rock mass is massive basalt. It's very stable. It's very solid. But importantly, we only need to use standard bolts and mesh as our ground support here, and it holds up really well. We have attracted some really high quality contractors to site. So we have GR Engineering building our 1 million tonne per annum plant. GRs can do this standing on their heads, I reckon. You know, it's a 1 million tonne per annum CIL plant. They've done this many, many times before. And we've just appointed Develop as our underground mining contractor. So Bill Beeman, who you heard from yesterday, has put together a really fantastic high quality team. They've been on site for about 2 weeks now, and they're already breaking development records on a day-by-day basis. So that's good. And look, to close out, I hope it comes across in my talk. I'm very excited about the Bellevue project. We've got an asset that really does have, you know, world-class potential. We've got a highly motivated team. We've got a clear potential for the project to grow from a production, resource and reserve perspective. We're going to be a leader in the ESG space. And as we continue down the path to production, tick the boxes and de-risk the project, there's a pathway to a significant re-rate. Thank you.